The world of banking has recently been rocked by the news of Silicon Valley Bank being the largest bank disaster since 2008. As a well-known bank in the tech industry that has been around for more than 40 years, this news came as a shock to many people who have come to rely on their services. However, despite this setback, it's important to remember that all companies have strengths and weaknesses, opportunities, and threats. Using the SWOT analysis tool can help companies identify these factors and make informed decisions about how to move forward. By looking at Silicon Valley Bank's strengths, weaknesses, opportunities, and threats, it's possible to see where they excel and where they needed to improve. Ultimately, a company's success depends on how well they can navigate these factors and adapt to changes in the market. Before I dive into my SWOT analysis of SVB, I'd like to give you more of a high-level understanding of it. SWOT stands for Strengths, Weaknesses, Opportunities, and Threats. Strengths are things that the company is really good at, like having a strong reputation or knowing a lot about technology. Weaknesses are areas where the company needs to improve, like being too dependent on one type of customer or not having a big presence in many countries. Opportunities are chances for the company to grow or do new things, like expanding into new markets or forming partnerships with other companies. Threats are things that could hurt the company's business, like a big economic downturn or competition from other banks. By doing a SWOT analysis, companies can get a better understanding of their strengths and weaknesses and figure out ways to take advantage of opportunities and deal with threats. It's a useful tool for any company that wants to be successful. Now let's dive into Silicon Valley Bank's SWOT analysis. Silicon Valley Bank was established in 1983 in San Jose, California. Here are some things that are good and not so good about Silicon Valley Bank. Strengths. Silicon Valley Bank is very popular and lots of people like using their services. They have a lot of customers who are technology startups, venture capital firms, and entrepreneurs, which makes them lots of money. Since they work with technology companies, they really understand all the latest trends and can give their customers the most up-to-date banking services. Silicon Valley Bank offers different types of financial services, like banking, investing, and managing wealth, which is good because they don't rely on just one way of making money. Weaknesses. Limited lending diversification. Silicon Valley Bank's lending business is heavily concentrated in the technology and life science sectors, which could make it vulnerable to industry-specific economic downturns or changes. Geographical concentration. While Silicon Valley Bank has a significant international presence, it is heavily concentrated in the United States, which could limit its growth potential and make it vulnerable to changes in the U.S. economy. Concentration risk. The bank's loan portfolio is concentrated in a small number of clients and industries, which could make it vulnerable to defaults and losses if these clients or industries experience financial difficulties. Opportunities. Diversification into new industries. Silicon Valley Bank could diversify its lending portfolio by expanding its services into new industries beyond technology and life sciences. Expansion into new geographic markets. Silicon Valley Bank could expand its business into new geographic markets to diversify its revenue streams and reduce concentration risk. Emerging technologies. Silicon Valley Bank could capitalize on emerging technologies, such as blockchain, artificial intelligence, or cryptocurrencies, to create new products or services for its clients. Threats. Dependence on the tech industry. While SVB's focus on the tech industry has been a strength, it also means that the bank is highly dependent on the success of that industry. Any negative changes in the tech industry could negatively impact SVB. Inflation risks. Inflation can erode the value of SVB's assets, reduce its purchasing power, and increase its operating costs, which can impact the bank's profitability. If interest rates rise, SVB's cost of funding could increase, which could reduce profitability. I hope you learned more about SVB from my SWOT analysis. If you are interested in optimizing your finances, check out more videos from Smart Wealth Lifestyle.